Today in the grain market, corn had a big rebound with a new low to start and finishing a little bit higher just shows the strength in the market. It's really a sizable recovery with about a 25-cent range. The momentum on Friday really just sold the market off and off a lot, and we were able to recover it today. It's interesting to note that even with all the selling going on Friday, we're still left with a sizable long position of well over 400,000 contracts. That just tells you that there's an awful lot of support in the market right now, and I expect that we went into a full-out correction really with all the grains across the board. That just tells me that we finally got the pullback that we were looking for, and now everyone can reassess this market. But it looks like they all did it at once today, with the market really coming back with a vengeance. One of the things to take a look at is the options and the March contract has moved up. The volatility has moved up to 30%. While that's not unheard of, we haven't been to those kind of numbers in quite a while. That just shows you that we're really expecting a lot more of two-sided trade in the market, and so certainly a lot more trade action going forward. Now, soybeans also recovered the same way. The futures did gain back most of Friday's losses. We had a 50-cent range in soybeans, which is such a surprise that we got down to $13 and then ended up at $13.46. That's a pretty big move and a pretty big recovery. Seeing that we're already down almost $1.36 in just 6 sessions from the high just a couple of weeks ago. But there was some liquidation on Friday as well, but it's certainly the option volatility there in the soybeans is up to 26.5%. This just tells us there's a lot more activity in the market, and if you want to make a little bit of a comparison with option volatility, last year at this time in soybeans, the option vol was 10.5%. So that gives you a little bit of perspective about what activity is going on in these markets. Now, wheat today was higher. I think the futures did really follow the row crops. And basically the market was relatively strong. Now, overall, global supplies have not been short, and I know that there's some issues with Russia that's going to give the market some kind of support, underlying support. But really, wheat's been following along with corn and soybeans. And that being said, the market still looks pretty strong. Export demand in the wheat was a little bit sluggish, but I think that there's still an awful lot of support in this market, and when it rebounded, it really came back an awful lot. And of course, with the option volatility as high as 25% for wheat, that just tells you that we're still expecting a lot more two-sided trade and a lot more action in the market really for quite a while, because the February USDA report is kind of a long way away. Grains do offer that big solid comeback, and it's responding well as we start this new week.